All right. Good morning, everybody. Thank you for joining. This is Dee Dee with Power of Three Trading. I'm not here just to teach you how to trade the strat, but teach you how to profit from the strat techniques. If you have more questions regarding the strat, please reach out to my guy, Rob Smith at Smiths in the Black channel, Robert the Black on Twitter, and at Sepia Group. So yesterday, let's just start with the cues. I tell you, we're getting further and further into, some exhaustion, if you will. The market is a bit choppy, right? And so we can expect that, what's that? Excuse me. On Friday, it traded down to our broadening formation on our monthly, right? We drew this on our monthly broadening formation using this outside bar and this inside bar. Okay, it hit that Friday, and you can see yesterday it retested that level, got close again, but it did not trade below that level and reversed. Price was inside this 2-day range. Okay, so we have to understand, and so I'm going to spend a little bit of time today talking about how do you find the best stocks to trade. And this is where I look at my 2-day. I'm always monitoring the 3-day, but when on the 2-day flip, I take a look at that, right? Because remember, this was your 3-day range. Today starts a new 3-day candle. And so price action hit this on that first day of that 3-day pattern. Okay, so this is your 3-day range. Price took that, hit our broadening formation, traded up, and then yesterday it traded inside this 2-day range. Okay, so when you're looking to to shorten your list for the day, what I tend to do is look at that 2 and 3-day pattern to see whether or not it's the start of that 2 or 3-day pattern, or if it's in the middle of that 2 and 3-day pattern. And so what we saw here yesterday with several stocks was prices trading inside this 2-day range. So you want to be aware of that and try to avoid these stocks, especially at the open, and then use your scalping techniques to try to scalp the market, see if you can get a profit by scalping, because it's got to break outside of these ranges. It doesn't matter, I think we talked about this before, which time frame you use. You have to understand when you're trading inside a range. And so this is, a 2-day range, like it, or a 60-minute range. We want to try to avoid those. And if you do trade them, you have to use shorter time frames and your scalping techniques, okay? And so when we look at Tesla, we traded Tesla yesterday. This is where, when you're talking about, again, your short list of stocks that you want to trade for the day, look for stocks. Rob, will always say, what's the next 2? So the next 2 is on any time frame you want to trade. So you want to try to trade outside those ranges. And Tesla did yesterday, but barely. Okay, it was an inside day, right? So you had a 2 down inside day, and you had a 2-1-2 continuation to the downside. But it hit our support level, right? And we'll show you this on a shorter time frame, and couldn't go much further. And so when we talked about this yesterday, we had our broadening formation. We said, okay, on the monthly, it's got to take this level, right? Because these are the levels we're looking at. And this was 620.46. We just drew a horizontal line here, and it got down to 620.57, guys. 11 cents short of that. Here's what I looked at yesterday. And I tell you, this told a story for me. This told the story. This is a 12-month chart on Tesla. This was pandemic year. This is January 2020 to the end, January, December 2020. This went 2 up and this is coming down, guys. I'm looking at this and I'm asking myself the question, oh wow, if Tesla breaks 600, how far will price action trade? The low of this, so this is an inside year. The low of 2021 was 539.49, right? We're in the second quarter. We're in the second quarter. And so it's going to be interesting to see, you know, I'm going to continue to trade Tesla. I've been trading it for a while now. And once I started mastering these broadening formations, I tend to do a lot better trading Tesla because it's a volatile stock. So you have to be careful if you're not sure how to draw those broadening formations, and wait for those inside bars for your entry. This could hurt you, but yeah, I'm paying bills trading Tesla right now, guys. So just be aware that this price action still has room to go. Right, so if it cracks this today, 620.46, right now in pre-market it's at 620.75. We'll see what happens. I would imagine that given we're in the, let's look at my 3-day pattern. This is a 3-day flip now. You know, your price action is below -100. Big 2 down bar here in this 3-day range. Certainly price could trade down, hit that that support level of that's target, if you will, 620.46, and trade inside that 3-day range. And if that happens, you're in conflict, right? Because this would be full time frame continuity to the downside. So if it hits the that target there, our monthly target, where we drew this here on 620.46, and reverses, just know that you're in conflict. So just be careful with that if there's a reversal against you. But with price action well below -100 on my 3-day candle, I'd be using my scalping techniques to trade Tesla if it trades back inside yesterday's range. Okay, so we're going to be careful with that. But right now, today is day 2 of a 2-day range. It is certainly poised to trade lower. Okay, today is day 2 of the 2-day range. So just be careful. If it trades inside yesterday's range, I may not trade it at all, and just wait until Thursday. So be careful with that. So let's talk about the trade yesterday. So this is how we set it up. We said we drew our broadening formations. We had to go out, I believe, because again, we're at some exhaustion. We drew these broadening formations on the daily at this horizontal line here. Let's see where that is. Hello, where did we draw this line? We have to go way back. Okay, this was July of 2021. This low right here. So July, this was 627.24, right? It traded below that. That was this horizontal line. And then we had another line. I can't even see these anymore. Jeez. All right, so we had this broad information here. So that's, okay, so that's at lower level. I'm gonna leave that. This 621, where'd that come from? Unless something got moved. 621.29, I think this must have gotten moved. Apologize for that. And this was a broadening formation here. Okay. All right, so 621.29. Yeah, that was that level. And it traded to 620.57. So it took this level out, guys. And right now it's at 620.50. And on that monthly, where do we say our level was? 620.46. Okay, so it looks like it's 620.46 is our monthly low, and it's at 620.50 pre-market. So it looks like it wants to take that level, guys. So I'm gonna leave this lower broadening formation here because we drew that off of this, this 2 down and this bar here, this 2 down bar here, 627, and here, 621.49. So we're gonna leave these. This is 620.46, and it actually is right below that. Oh wow, 620.46. Okay, so it looks like it's gonna trade below that level now in pre-market. And so our next level we had drawn here on this outside bar. Where do we go to draw this? All right, so this 2 down bar is 609.50. Okay, so can you see that it's in this range right here? It's trading in this range. So we're gonna look to take that out, 609.50. Okay, so we're gonna leave that. So we're gonna leave those broad informations that we drew to the downside. And basically what we're looking for is to see if price action is going to trade below 600. And then we have this outside bar here. So I'm gonna walk back through this. Let me pull up my 3-week here real quick, because I think I saw a level on this 3-week chart. Remember, well, if you watched my video yesterday, we talked about this being the last week in the 3-week pattern, right? So Tuesday starts a new 3-week chart, and so that's what it was. I marked these on here. Yeah, so this was that's where I marked these on the 3-week pattern, because it's like, why is that off? All right, so this was the inside bar, okay, on this 3-week. So that's the 621.29. This is the 608.88. So we drew our broad information on the daily here. So if it breaks that level, 591, yeah, that's what I saw. And I just saw that on the daily as well. So what I'm gonna do here, guys, I'm just gonna draw, because I don't think we're not gonna have a good range here because it's already below this level. I don't know if I like it that far to the downside. I'll just do that, but I'm gonna draw a horizontal line right here, guys, on the low of that 3-week chart. Yeah, because this is 542. So that's where we're gonna, okay, so let's go back. All right, so what I did was I drew a horizontal line. If price continues to trade below 600, it's got to take out this range here. So we just drew a horizontal line right here on the low of this chart, which is 591.01. Right, and then I drew a broadening formation from the low of this candle to the high of this candle, because once it takes out this range, if it continues to trade lower, you're inside this range. So this would be the lower broadening formation for this 3-week channel, 3-week range. Okay, this will be the lower broadening formation. And so if it breaks that, then guys, like my buddy Jim said, Tesla can be inside, be trading with Ford. Because again, when I looked at that 12-month chart, it's like, when you go back and look at that pre-pandemic lows, right? This is July, this is April, this is January, you're back below 100. So I don't know if that's going to happen. There's just like Apple, a lot of Tesla lovers, but people don't short Apple like they short Tesla. So there's a lot of hate for Elon Musk, unfortunately. All right, so that we're going to leave those levels then, guys. I may redraw the daily range, but for the lower levels, we're going to leave those. So everything below the 625, we're going to leave. We can leave those upper ranges too, because it's not trading above that. May just draw some here on the 18 minute. But let's look at how. Okay. So, Tanya, it sounds like you're okay. All right, guys, let's try to stay on mute. All right, so let's look at how we would have traded this. So we said we want to short below 644. And if you look at the 18-minute candle, it absolutely traded below that in that first 18 minutes. So 644, right? And the reason we call that was because we wanted to trade Tesla below. We were looking at this outside bar, and then we had this 2-up bar. So I wanted to trade Tesla short if it cleared this 2-up bar here. And we said this would be our first target. So we needed it to trade below there. And then we had drawn this broadening formation here, as we just discussed. That's the 625 on that daily. So that's where I was looking to short below this range, this being our first target, and this being our second target. So what happened, oh, the joy of children. It's okay. No worries. So what we saw was price action traded down, right? Below this range, then it went inside, then we had an outside bar. Little tricky, guys, because our CCI started to trend up on the 6-minute, but still well below negative 100 here. And so I took a position once price started to trade back down. So I waited for this 18-minute flip. So I actually got in a little early here off this 3-2. It started trading up. I was like, yikes, right? But I held my position. And the only reason I did that, guys, was because on the 18-minute CCI, I was monitoring CCI. I said, well, if this trades 3-2, because I took it off the 2 down, the low of this 18-minute candle, and then it started trading up. So I was at a loss. It started a TTO, right? If you were looking at this on a 3-minute time frame, this is your TTO. And so I said, well, if price action continues, I'm going to take a loss on this. But I held it only because CCI was well below negative 200 here. So this is on the 18-minute. And so I said the probability of this trading all the way back up, and it was lower. So I held it, and so it was a good hold. The next candle, it traded down. Now, if price had been trading above -100 on the 6-minute like it did here, then I would have just taken a loss and exited. But I actually did get out because it did not hit this level here. It traded down, created this doji, and the next candle, you can see it's still trending up. When you're trading, when I'm trading using my CCI on these shorter time frames, once price starts to cross over, I have to exit. I have no confidence that price is going to continue to the downside once it crosses over plus or minus 100. I have no confidence that price is going to continue to the upside, like you saw here, but to the downside. And I actually took this short here. All right, so that's how I use it. Like I've said before, it doesn't necessarily give you direction, but it helps me with momentum. Has momentum started to stall? When you're trading options, you can't hold these when they come back up, because your option contract, your premiums start to lose value really quickly. And with Tesla, if you just looked at this range here, 637 to 628, I mean, that's a 9-point move. So, with a delta of, around 50, 46 to 50, that's half your value in this 1 6-minute candle, right? Right, 6 minute candle, you're on an $8 move, that could be $350, $400. And so, on a single contract. So you have to, and I can't stress this enough, that when you see price action starting to stall on you in the money or not, just take your profit. There will always be an opportunity to get back into a trade. And I particularly like to see them when they go 2-2, right? So let the market come back up and reverse back in your favor. And so that's what I did here. I exited when price started coming back up inside this range. And then this happened at the flip, came back down. I was like, could have made a little bit more. But when you start thinking like that, you're sure to jump back in, get triangled out, and lose more money than you would have if you had just taken your profits and walked away. All right, so just be careful. This went inside, so I was done with Tesla, because you're inside this range now. And then you had the 90-minute flip here. Look at these candles. And I said this when I did a video with I did a weekend shift with Jermaine. I said, if you're having to zoom in or expand your chart to see your candles, then you're probably trading in a tight range, right? So this is a tight range. We don't want to be in this mess. You're going to get killed. Then you had this move here in this outside bar. You're still inside 90. I looked at it. I was like, don't chase this. You're still in what I call my red zone. You're below 0 here on the 18-minute on CCI. So just wait and see if there's another opportunity to get back in. And this is what I mean when I say you're at exhaustion, guys. Market is going to be choppy, which means you have to be very patient and use good techniques to trade these markets. And then I had this 3-2-2. I should have taken it here off the shooter. This was the 90-minute flip, guys. I should have taken it here, but I held off. So my entry wasn't the best because I saw the 3-2 here. So I waited till price got below this level to take my entry, came back up. I was like, but I held it again. The reason I waited, because price was not below -100 on here. If price was still below -100, I probably would have gotten early, but I held off on this. It traded back to our level, came back up, and you see this outside bar here. So I'm looking at CCI, I'm looking at the 90, we're down here on the 90, and I'm like, we're well into this 90-minute candle when that happened. So I just used my judgment and I said, I'm gonna hold this because I'm in the money, so I'm already winning for the day. I'm in the money here, but when it started to come back up, I'm right at break even. So I said, I'm gonna hold this. And so I did. And then price broke this level here. And now you have this, right? You have this shooter, I'm sorry, this little small candle here, hammer. Then you had this inside, prices coming back up. I had to exit in this, when price started to trade back up here, jumped out, made a little profit. But again, had my entry been up here off this shooter here, that profit would have looked a lot better. But as soon as this closed and started to come back in here, I exited this trade. All right, and so that's how I use CCI. I'm constantly monitoring, is this thing flipping on me? Yes, it is. I'm getting out of this trade, okay? I'm not gonna worry about trying to squeeze a couple more dollars out of here because I looked at this flip. You had a shooter, this hammer here. I was like, yep, it's time. And then I missed this. I didn't trade the end of the day, but there's an opportunity to get back in here on this 90 as price again came back up. Went outside, did not hold, right? So it did not, I said it did hold. It did not trade above this broad information we drew, failed here, create another outside bar, and you could have taken that 3-2 down. And that's actually it did hit our lower level at 621.29. It actually hit it in this candle here, traded below that. And so there was another opportunity there, but I was done with Tesla. My experience has taught me that when you make money off Tesla, be okay and move on. Don't keep trying to, catch these ranges when they start to get smaller, because Tesla will triangle you out. And for no reason. The market makers, I don't even know, volume gets a little light, and the next thing you know, you have this $10 move in a minute candle, and you're looking and saying, what just happened? Only for it to continue. And all it did is, in my humble opinion, I think it's some price discovery. They see all these stops, these orders, and just trade to those, take those stops, and keep moving. And so I try to stay out of the market when its volume gets light, because and I use CCI for that. That's why I said this was another opportunity here, because you could see it crossing back down, but it's not worth it. I've gotten caught too many times holding Tesla, thinking it's going to go down with light volume, only for me to get triangled out and lose money. So it's hard. All right, so I'm looking at, let's go with Roku real quick. I did not trade Roku. We did talk about it yesterday. We knew we wanted to go short below 88. Well, Roku gap down. It was a gap continuation. So, but I didn't trade it because I didn't care for the setups. But there was an opportunity when the price action gaps down like this and goes 222 continuation. You had this inside bar here, but at this point, CCI is starting to trade up. This was a risky trade, so I chose not to enter here. And you can see the candles got smaller and smaller. So there was a couple dollars maybe in this trade as it traded down, and then you had this inside bar in the 90. So I didn't trade it at all. Got no inside bar here. It had already traded below our lower broad information. So generally when that happens, I usually avoid those. I like to wait for either a reversal to trade to the upside, or something like here where we saw a 2-2 continuation to the downside. But because of my 90, having it, it was such a gapper down, you had this big move in the first 90 minutes. I didn't see an opportunity here. CCI started coming back up on the 90, so I just avoided it altogether. Okay, but just know that you can use your scalping techniques to scalp this trade, and so you would have been able to do that. But like I said, when you're using your scalping techniques, you have to know how far price action is going to go, and so you'll want to draw those broadening formations. So you see this, and I would draw it on the 18. And so you have this 2 up bar, you see price action trading 2 down, and then you go to your shorter time frame for your entry, right? And now you have this 2 up bar, price comes back down, you got an inside bar, you take this inside bar, this becomes your target. Take your money and run. You get back into this position, like you see price break down further, goes inside, comes back up, you know you need to exit this position. Okay, because price is still trading back above negative 100. So trending up on your 6-minute, never cross back below on your 18-minute, trending up on your 90-minute. Okay. So just keep that in mind, but that's how you scalp, okay? You draw your trend lines on your whichever time frame you're using. I would do it on the 15-minute. I particularly like the 18-minute, but draw your trend line on that 15-minute. Look for those reversal patterns, a continuation pattern. So this is time frame continuity to the downside, right? You're 2 down on a day. That's the 3-week up the whole time. Let's say this and we'll move on. But your continuity is to the downside. And so when you're looking to scalp and you don't have an entry here and you're waiting for price to reverse on these shorter time frames and then 2-2 continuation or 2-1-2 continuation to the downside, that's how you would do it, right? Draw your broadening formation from those lows, because that's your target, right? You're trying to target those lows of the day. So you're going to draw your broadening formation on those lows, see how far price action is going to trade. I draw it trending up, not down, right? Because this is the way I see people drawing it. And yeah, that may happen at some point, but you draw it this way. Why? Because it's got to take out these ranges, guys. And it doesn't always happen. It doesn't always happen. So that's why I draw it this way. This is the upper range, if you will, of this low. And so you're saying if price takes this range, which it did, it's got to stay down for price to continue. It did not. And so that gives you your indication you have to get back out of this trade. It's not going to continue. Exit that position. It's coming back up inside this range. All right. Cool. So we're going to wrap it up. So when it comes to today, I did look at some gappers. And honestly, guys, I didn't see much. This is what I saw. Let me see if anything's changed from early. No, there's not much. And so Best Buy just popped up. There is, I don't normally trade Best Buy. Yep, we don't need. So this is our range. And I mean, these are the stocks I had identified early, but as you can see, some of them have just fallen off the list, guys. Going back to how do you determine whether or not you want to, how do you create your short list? I look at those gappers and I look at the broader, the longer time frame. Tesla will be trading. We talked about that already. We're going to keep our lows from yesterday on the list, using the same techniques inside, our 18 or go into a shorter time frame if necessary. But we need simultaneous breaks with the broader market. Twilio, maybe, but again, guys, you're near all time. Oh geez, no. 2018, 23, 25. Okay, so we got 79.25 on this quarter, 79.25. So definitely room for that to continue to the downside for the quarter. Remember I said quarter. The month ends here, 79.25, right? So there may be some room here on Twilio, we'll see. Applied materials, I don't like this. I saw this morning. Chips are on tap. So NVIDIA reports after the close today. So the market will likely be looking at the chip stocks, okay? And so because Applied Materials is inside this 2-day range, I will not be looking at it, right? Maybe tomorrow after NVIDIA reports. So Applied Materials reported a couple last week. Not so good. So I would expect if NVIDIA comes out with a report, not so good, we may see the chips continue to fall. They will definitely be on my list for tomorrow. CRM, again, small range here. Yesterday, there were some scalps that you could have taken, but again, it's trading inside this 2-day range. I would like for it to break below 154 for me to be interested. Let's see, 174, I'm sorry, 155.08 is the low of this May 20th range here. It has taken that. I'd like to see some continuation to the downside there if I'm going to continue this, if I trade this short. But just remember, guys, we are in full time frame continuity to the downside on many of these stocks, especially tech stocks. Datadog, that's something I may have on my list for today. It still has some range here. We're inside this low, the inside bar here, 81.70. There may be some room on Datadog if you want to add that to your list. Etsy continuing to get beat up. 61.30. There's some room on this range for if the broader market continues to trade down this week. I'll have that on my list. Bill.com. I don't generally trade this. It popped up this morning. So I'm not sure how it trades, but it's inside this range. 97.72 is the low of October low. So again, we're at the end of this month, guys. So I'm just looking at these monthly ranges to see if there's an opportunity for price to continue to trade lower to capture some of these ranges. And then Best Buy just popped up. It's an outside bar on a monthly. I will not have it on my list, although it went two up, two down. Did it report? Okay, it reported yesterday. So surprise revenue, they had a beat but missed barely on the bottom line. So it's today is day 2 of the 2-day range. I'll avoid this today because for this to trade lower, it's in this 2-day range, it's got to take this, go 3. It's already gone 3 on the month. I may avoid this guy, but it's gapping down. But if you want to take it, put it on your list, but I will probably avoid that and maybe look for a reversal. I don't know. We'll see where it opens. But yeah, so of these trades, I'm going to take Applied Material off my list, but I'll probably put these on my gapper list for today. All right, so I am going to wrap up with our scripture for the day, Proverbs 21:5. The plans of the diligent lead surely to advantage, but everyone who is hasty comes surely to poverty. The best advice I can give you guys is to just, again, use caution, because the market will tell you what it's going to do. But if you are hasty, with your moves, and you don't have clarity around the direction, it's very easy to get TTO'd, okay? So just hold off. Set up your charts as I do. If you have multiple stocks you want to trade, set up your charts, right? Set up your charts and just wait. Just wait. Time frame continuity. This was Twilio yesterday. Don't trade this, trade this. Capture you a couple dollars here. Okay. You got this big candle you're trying to fight against. This will be choppy going to the upside. Full time frame continuity, 90-minute flip, 1230. 1230 is your 60-minute flip. So it's your 15-minute flip, it's your 30-minute flip, it's your 18-minute flip, it's your 60-minute flip, it's your 90-minute flip, it's your 3-hour flip. 1230, I love to trade these 90-minute flips. I put it on a 90-minute, but it's 1230, guys. I'm telling you, you can trade the afternoon and just make money. Forget about the open. Just trade the afternoon and make money. Anyway, all right, I'm going to wrap it up, guys. Thank you so much for joining. If you have any questions, please feel free to hit me up on Twitter at R3D Pepsi. And if you like my videos, please subscribe to me on YouTube. Thanks, guys. Take care.